Now in Europe, we just want to go through Germany and France at this point, just because that was where we got some of the most data, and that was where we see some of the bigger shifts. So just looking at the aggregate, you want to look at Eurozone manufacturing was expected at 52, came in at 52.1. CPI was expected at 8.5, came in at 8.6 month over month, again, trending higher. Nothing surprising there. But then when you look at investor confidence, went from negative 20, the estimate was for negative 20, came in at negative 26.4. PPI starting to flatline a bit, but again, you're starting to see that pressure on the consumer, which is just, you're not seeing the same buying, which is going to pull down not so much the rate of the PPI. It's gonna flatline PPI. It's not gonna. There's the consumer slowing is just gonna cause that to really start the rate of change to flatline, not so much deflate, but just that slowing increase. Eurozone services was expected 52.8, came in at 53, putting the composite expected at 51.9 at 52. So again, you're still sitting there in slight expansion, but we see this already moving negative, and we'll talk about some of the key pieces on why going forward. Retail sales were expected at 0.4, came in at 0.2. Year over year, again, that drove us from, it was expected at negative 0.3, came in at positive 0.2. But the retail sales month over month are already rolling, already starting to move down, and that's in May. And again, in June, we see it as already negative and getting only further negative in July. And this is just when you look at Eurozone inflation surged to 8.6% in June from 8.1% in May, a fresh record, surpassing expectations of that 8.5% and bolstering calls for an aggressive ECB hike. Data reflects an escalating squeeze on households across Eurozone, where France, Italy, and Spain reported new all-time highs on the CPI front, which again is just more pressure to the consumer, more reasons why we see these issues just being pervasive and remaining throughout the European continent. So Eurozone, but at the same time, if Lagarde is going to raise rates, which she will, you're going to try to get your loans now while you can at these crazy rates, which really they shouldn't be there. And yes, they've risen because you're not getting what the ECB is showing. But when she raises rates, it's going to send it even further up. So they're going to tap as much as they can. So Eurozone loans to business year over year, companies tapping credit lines is at 5.8%. Eurozone loans to households is at 4.6%. As they say, smoke them while you got them. So, this is what it is. Try to lock in the rates that you can. Try to get as much of this capital at these free, realistically free rates or free money rates. As inflation continues to go up, you're still going to be well below the inflation line, which is obviously where you want to be. Now, German data, manufacturing was expected 52, came in at 52. Exports had a big dip, expected at positive 0.7, came in at negative 0.5. Imports were expected at 0.8, came in at 2.7. Trade balance, was expected to be at a positive 1.6, came in at negative $1 billion, which is, again, Germany is an exporting nation. So this is the first time, I think it's since 1999, that it's been negative. So it's just showing some of the pressure that's going to remain in the system, with services expected at 52.4, came in at 52.4, putting the composite right in line. But factory orders were expected at negative 0.5, came in at positive 0.1, which is, again, showing some of this, there's some strength. So it's not that you're going to get this floor dropping out. It's just the consumer slowing, the companies are slowing, people are looking at this differently. CapEx is getting cut. So that's going to lead to more pressure, as German construction came in last month was 45.4, came in at 45.9. So again, there's multiple parts of the economy that are already in recession. It's just the ones that are showing some growth. Is it enough to keep things up there? With industrial production expected at 0.4, came in at 0.2, and then industrial production year over year was expected at negative 1.8, came in at negative 1.5, and that's for May, and we already see it as negative in June, again showing some of that drag that we've been talking about. France, something similar. Manufacturing was expected at 51, came in at 51.4. Industrial production flat. Industrial production year over year expected at 0.3, came in at negative 0.4. Manufacturing production 0.8. Again, so you're getting some of these mixed signals as well, but services PMI was expected at 54.4, came in at 53.9. Composite coming just below estimates at 52.5. So you're still getting some of that growth. It's just where is it residing? And then when you look at the Eurozone as an aggregate with the pressure in other the periphery areas, and as you're facing rates going up, less Russian gas coming through, more pressure on the market in general, especially the consumer as the retail continues to come under pressure, that's where we see this being pulled down. Which is why when you look at German and consumer and French consumer confidence, you can see that it's already negative. German consumer confidence breakdown, home income expectations essentially through a floor below where it was in 2020, willingness to buy below 2020. Again, all of this is that drag that we're talking about, which is why we believe they're already in a recession. These are, I think, the easiest breakdowns on where we're seeing, because some of the industrial is okay. Some of the manufacturing is all right. Exports are not where they should be, but again, that could bounce back. It's just the consumer, the local individual is in pain, and that's where we're seeing some of the slowdown, which is what these investors' confidence is showing. And then the expectations index, the ZEW expectations, again, all firmly negative. But what does this mean? German industrial production is 10% lower than it should be. So even though it's still a positive number, it's still not where it should be given where the trend was coming into this. And that's why we continue to see the production and manufacturing and trend based on order intake. So that disconnect remains in there, and there's because Europe is still having huge supply chain issues, huge shortfalls in terms of that. That's keeping things from getting back to normal. And again, also weighing on where things are and where their economic growth projections are showing. While French inflation continues to ratchet higher, Portugal, again at 9%, just surging back up. Italy was expected at 7.9%, came at 8.5%. Eurozone, as you can see, it's surging back up. And given where TTF is, as we showed at the beginning of the Econ show, as well as in the EIA show, I mean, natural gas prices are just going back up. You're getting this pressure continuing. So then when you look at annual variations in percent of a compensation, you're getting compensation per employee moving up, negotiated wages moving, but look at inflation. It's not keeping up with inflation. So real wages, real spending is where we're talking about when we're looking at GDP growth, when we're looking at the expectations and already seeing that recessionary pressure. German retail sales, again, showing what we've been talking about of well off of trend, coming well back down to where they were, and we see more pressure to the downside given that wages. Spain, real retail sales holding fairly flat. But given where we see things in June, they will actually fall out of that blue box, because remember, this is looking at May, and we saw additional slowdowns in June. German foreign trade, as you can see here, this is the first time it's been negative since 1991. I said 99. I thought we had one bigger drop. But you're getting an idea of, again, the pressure, because Germany is an exporting nation. And without that key pillar of growth, that's going to lead to additional pressure to the downside. So that's what we have for you on the European side. Keeping it, again, fairly quick. Now we're going to dip into Asia and look at some of the things that are happening in the Asian theater.